What's up, guys? It's Tom with Stocked Up. I'm coming at you with another undervalued stocks to buy video this week. Another Sunday episode. You can see that the SPY went ahead and fell here significantly Friday based on the coronavirus news. I went ahead and started seeing news about this virus on Wednesday, Thursday, and then really bad market crash Friday. As you can see, it went ahead and fell below the 1000 SMA on a 15-minute chart. On a daily chart, it doesn't look too good. Looks like it might be falling back down towards the 100 on a daily, which is expected whenever you see really big rises like this on the SPY/S&P 500. Now this really does affect next week very largely. You can see if we go back to the 15-minute chart here, you can see the big fall. If it continues down, which I believe it's going to do, you're going to see a big correction this next week. And stocks that will be likely to rise are stocks like JNUG, which follow gold. Let's go to a daily chart. Stocks like JNUG that follow gold, which is a gold ETF actually. And then you can go ahead and see different stocks like VXX, which follows VIX, which is a volatility index, which means that whenever the market starts to sell off, pretty much the VXX or VIX, it starts to rise. You can make over 100% gains if you get in at the right time on VXX, right before it pops. As you see in the past here, you know, if you get in on days that like right before it pops, you could have made 13%. You could have made a nice 17%. You could have made, 24%, something around there. Let's see, 24%, 30% even. But yeah, that's just the potential that the VIX has whenever the market crashes. And you can see whenever the market crashed really big at the beginning of 2018, where the VIX way back here popped over 100%, just like it did here as well. Well, just about. It got to 80%. But you guys can see, you guys get the picture. Whenever the market goes down, the VXX or volatility index goes up, and that's what you want to see. Here is the VIX itself. This is the VIX itself. You can see it's a little harder to read than the VXX is. VXX is a little easier to read. But in the long term, JNUG and VXX, I believe, are going to start going up. And the other undervalued stock this week is XOM. Now, if you're playing any of these stocks, you can see the XOM is way down here at our support line. If we go to a 15-minute chart, you can see it's way down here, kind of double bottom down here. I'm looking for it to go up. If it doesn't go up, you guys can go ahead and get out pretty quickly. If it drops down, I'm going to get out at 65.50 myself. It's not a very big percentage loss. Let's see, very little percent lost here. Let's see. Yep, like 1.2% to make 6% plus if it does start to pop from here and go up. Now we just keep seeing more and more news about the coronavirus, more cases of it coming out, more quarantines, more cities are starting to have it exposed. There's more cases in the United States, and that's what really scares people. Once you start seeing stuff in the United States, that's whenever it started to go down. So we started seeing stuff about it like right here. It made the markets kind of like waver, like people were like, you know what, I'm not too sure yet. It's not really in the U.S. There's only a couple cases. Then boom, we got like, over 50 dead people now in China, for example, with over like 200 like very critical cases where the people are close to dying, and we have like thousands of new cases now, which is insane. The virus is spreading very, very quickly, and there doesn't seem to be a cure for it. So hopefully you can find a cure, but some stocks have been rising based on this, like some Medicare stocks. So definitely expect some volatility out of medical stocks like Pfizer and Johnson & Johnson and companies like Bayer, people that make medicines and different things like that as they try to look for a cure. The stocks may be very volatile, going up or down. I'm not too sure yet. I would probably say down. I think if I remember from Friday, Pfizer is down, so PFE is down. But going back to the SPY, we can see it did cross the 1,000 here and touched again. So we might see a nice drop downwards here, and it is definitely due for a drop with the big. It's pretty much been going up since the beginning of 2019, which is up 41%, which is amazing for a pretty safe stock like the SPY. So if you would have bought in right there, you'd be up 40% within a year or two, which is fantastic. And now it's time for a downturn, just like right here. You bought in, you had a nice uptrend of like 40%, and then boom, nice big drops, and that's probably what's going to happen again. And once it gets close to the 1,000 again, I'm going to be buying long term. But if it doesn't get close to 1,000, I'll probably just watch it. But until then, I'm going to be buying puts and stuff on the way down on a whole bunch of different stocks like Boeing, which may be going downwards towards the 1,000 here. It broke the green. green 500 exponential, and it's heading down towards the 1,000 now. Stocks like what's another one? Like AT&T here. I believe they've hit a little they've hit a nice support. There's just a whole bunch of different opportunities that this coronavirus could bring to the trading floor, and it's something that you guys should look at very carefully whenever you're trading. You might want to go ahead and look at SPY puts. That's what I would be looking at. They might start. You can see the implied volatility starting to rise as people are expecting more moves out of this, which is exactly what we want to see. We can see right here during this big drop, the implied volatility started rising, and if that starts to happen right here, you're going to see the options explode in price. And if you already have them while they're low and then they explode, that's good. So if you need to buy time, spend a little bit more money on your options, maybe like $50 to $100 more, maybe buy a month or two extra worth of time and let the stock fall. And if you don't do that, it might go ahead and rise and consolidate around the area it is. If not, it's going to fall. And that's whenever you guys are going to make your profits on puts. If you could make them on puts very quickly if it goes ahead and falls within the next couple of days, obviously, which is what we're looking for. We're really looking for that to happen. But the big thing is the long-term picture for big long-term stockholders, like stocks like LEG, stocks like Kellogg's, stocks like Exxon and Mobil, for example. That's another one that I had on the list here. Exxon and Mobil, like I just analyzed earlier. JNUG, we can play that stock very, very easily. Tomorrow, you can see it went ahead and broke the 1,000 on the 15-minute. Literally, you buy in above the 1,000, put your stop loss below. You're risking 2% maximum here. That's max. You could risk 1.5%. If you want to go below the blue, you could risk 6%, but you are going to be making a lot more in return if this stock does go ahead and pop higher. If it pops up to like right there where it was, you're talking about a 6% gain, so you could risk about 2% to make 6%. That's a pretty good 3-to-1 risk-reward ratio there. Or 2-to-1 actually, my mistake, but either way, JNUG, gold stocks, VXX, anything like that are good for whenever the market's going down. If not, puts on things like NKE, and things like, well, it is bouncing off the 1,000, but they did go up significantly Friday, but puts on things like SPY, different things like that. This virus could start affecting things coming out of China. You could see lockdowns on products being shipped out for companies like Amazon, Wish, anything from China, guys. Everything comes from China. Realize that it could cause shipping delays and everything like that. If we annex or will pretty much stop any flow of anything from China. So, no one will be able to go on planes. No one will be able to transport goods. No ships will be coming over. No planes. Obviously no cars. But, you get the picture. No one will be going to China. We'll be totally locked off from them. They'll be totally quarantined from the rest of the world. And if that does happen, expect markets to drop and expect the U.S. to have to pick up a lot of things on their own. Like, for example, we're going to have to come up with a lot of manufacturing on our own for soy. We're going to have to come up with a whole bunch of different plethoras of goods to support the ecosystem or the economy / well-being of our own citizens. So it will drive the markets down if that does happen. And if that happens, that's like worst case scenario here if this virus really starts breaking out bad. And even though the market was down, we can see stocks still go up. Like INTC here went up. If we go ahead and switch some watch list, we can see the percent change gainers here. Some stocks still obviously went up, like this one and this. Obviously some of these are just popping because they're just, the percent change gainers list. It's just a standard little list. You can find it really easy. Here's VXX. VXX is on there. VXX just passed the 1,000, and I'm looking for that to go up. You can buy, make 6%, risk 2 to 3% here, maximum risk. And that's a very good trade. If you want to trade that, you could even hold and maybe get a good pop that's higher than a 6% gain if it goes up. Imagine if it pops like this in pre-market, guys. That's exactly what you're going to want. Some huge pre-market, post-market action on this. Expect the market to be very volatile this week. Watch for stocks to go down. I'm definitely buying a lot of puts from the statistical modeling program. Link will be below, as well as the link for Stock Mastery. Check them both out. Smash the subscribe button. And this is Tom, you guys, signing off.